My reading of this is the following. I think we have in central banking now a very strong sense that the central bank stepped in to prevent worse things happening. They are trying to go back to more normal policies as the world is normalizing. I think the big feature of this year has been a normalization of the world economy. The US is taking again the cyclical lead position in the recovery. Emerging markets have come down quite a bit, so they're not leading growth globally. They're kind of lagging it at the moment, which used to be the average picture. And Europe is somewhere in the middle, trying to come out of a deep crisis. And the central banks played a key role in that. I see it as a sign of continuity. Janet Yellen was a trademark name in economics. She was a trademark name in central banking, very experienced, years of experience during the crisis, and so I see it as a sign of continuity.
Do you have a confidence, not only with your representation as chairman of UBS, but formally with the Bundesbank, that Janet Yellen, who's perceived clearly the stereotype as uber dove, does she have the ability, when the time is appropriate, to act more Bundesbank-like? Is there a little bit of Bundesbank in her?
Well, I think that's a long stretch, but I think the view is more that, you know, what will be more important in central banking will be committee views. I think the Fed is moving towards that. The ECB has clearly moved to that. So what matters is much less the personal view of the one person at the helm of the bank, but more where the committee sees the economy. And the Fed has moved to a communication that puts the committee at the core. Look at their projections where interest rates will be in the years going forward. The consensus view, where most of the people think interest rates will be, is a good guidance for markets.